We've had several stories that have had the stock market ticker at the top of them, and you saw that it was down. Business Insider India says that U.S. stocks dive as bond yields flash recession warning and investors brace for inflation reading. U.S. stocks finished lower after a late session dive as investors weighed new recession warnings, while fresh COVID-19 restrictions in China dimmed prospects for growth. The spread between the yields on the 10-year and 2-year Treasury notes inverted to their deepest point since before the 2008 financial crisis. The widely followed recession indicator inverted briefly earlier this year as well. Meanwhile, several cities in China have implemented new restrictions to tamp down increases in coronavirus cases. Markets could get another jolt early on Wednesday when the Labor Department releases the June Consumer Price Index. Analysts expect year-over-year inflation will accelerate to 8.8% from 8.6% in May, keeping pressure on the Federal Reserve to continue its aggressive pace of policy tightening. But apparently, inflation is set to decelerate throughout the end of the year. At least that's what some asshole on CNBC says.
The sort of whether inflation or how much will inflation recede part of this. How important is this to investing right now?
Oh, it's the single most important issue that investors are facing right now. And we are, have a very important inflation report tomorrow. We are expecting inflation to decelerate into the balance of this year. And we're hoping that at least at the core level, peak inflation is behind us.
I also take issue with what they're calling inflation. Inflation is when the government prints more money and devalues the money, the currency that is already in circulation. The way to avoid printing more money is to tax rich people and bring the money back that's already in existence back into circulation. What they're describing as inflation is just corporate greed, gouging, markup. It's just capitalism. Like, they're not actually bitching about actual inflation.
But for consumers, as we all know, food, energy are very important. So while we typically would be focused a little bit more on core and the impacts on monetary policy, headline inflation is very important. So the risks there being food and energy. But we do expect it to decelerate. Recession odds are elevated, say maybe 30 to 40% over the next year. But we still think that there's a landing strip for inflation to slow, the Fed to be on net a little bit more dovish than what the market is expecting, and the consumer to remain in good health.
So that all suggests to me, Megan, that the recession odds are rising, but it is not your base case, that the Fed may not be as hawkish as it is appearing to be right now, that inflation might be slowing, that we are closer to the end of this market sell-off than the beginning. How likely do you think it is that the stock market in the U.S. begins to turn up over the next couple of months and maybe ends the year somewhat higher than it is at least today?
Yeah, well, that's really interesting. So you raised a couple of good points, which is the duration of this sell-off. And we do think this could be a little bit on the longer side of things, mostly because the catalyst that we need in order to see the market bottom is not only inflation to peak, but to get a better sense of the pace of deceleration and whether the Fed really will be able to maybe get to a point where they raise the next couple of meetings and then slow that pace or even pause and look around. But the key is that the market tends to sniff out any changes in inflation even ahead of the actual data.
Market
We've had a number of guests in commentary on talking about how June CPI will be a little bit lagged to some degree because of the changes in gasoline prices and energy prices and how much that has changed just over the last couple of weeks. So we do expect the market might sniff that out in advance. And that's just why it's just simply not a time for investors to be taking big bets in this market. We've tightened up our positioning, and we're just looking to remain diversified and find out within different sectors.
So it's a dollar cost average in at reasonable intervals. It's an investor's market, not a trader's market.
Well, I would say for the tactical trading point of view, we do have elevated cash, much higher than we typically would hold and that we've held over the recent years. But for investors who have had, we deal with a lot of investors who have had
elevated cash,
looking to put a large amount of money to work at a particular time. We still think it's a good idea to stick with a plan and dollar cost average in for those clients, because even if we get a recession, which is not our base case, but elevated probability, we're probably 2/3 of the way there to pricing that in. And it's very difficult to time the market and the bottom perfectly, as we all know. So getting that cash in gradually and methodically, we think is still the right way to go.
God, I'd love to have a liquid.
She says it's hard to time the bottom. One Mr. Jim Cramer says otherwise. He thinks he knows where the bottom is. Maybe he's a bottom. Ooh. Where's it at?
You live in sexual anarchy?
Listen, the financing markets right now for a new...
And Cramer says it's sooner rather than later. I never miss an opportunity to play a Jim Cramer clip because Cramer is always entertaining, but you can be sure that whatever he says is the exact opposite of whatever is going to happen.
New go private are difficult.
Are they worse than the emerging markets, which we never talk about, which are horrible?
We don't talk about the emerging markets hardly ever. You're right. I don't know.
Well, that's because we don't talk about emerging markets. Always love the emerging markets.
I used to focus a lot more on them. I once ran a newsletter on emerging markets.
Who did?
But I did in '92.
You were so interesting then.
You question his credentials on emerging markets, Jim?
But I
got your newsletter.
Wait, will you stop? Let's get back to what we were talking about. The financing markets are difficult right now in terms of you're not going to get anything done in high yield that isn't already being marketed.
Well, what does that say? Does that say we're at the top?
Citrix is done. Tenneco is going to get done. There's a couple of others, but new stuff right now. Pause.
And how much of that is Canner?
Is what I'm hearing from participants.
How much of that is Canner and antitrust?
No. This is about secondary prices for high yield and things of that nature.
Okay, because
this is not. You're talking now broadly speaking about M&A and whether there's a headwind from regulatory concern. Of course,
well, have you seen the he's brought case after case after case. No one's paying any attention
to
high yield index, particularly the people involved with with Goldman Sachs and JetBlue.
We could end with Twitter, which is
that was a cheap shot that I thought you'd buy.
I know. Well,
who gives a shit about what the people at Goldman Sachs think?
They keep putting off a vote there, Spirit and Frontier, as they keep trying.
How about the new guy from Goldman hired from Google?
Who?
Yeah,
the Guggenheimer from Google.
I think it's going to be amazing.
You do?
Developing a whole new business line.
Yep.
At Goldman.
What are they doing?
Making money.
All right, so we're not going to explain this because
my God!
I don't know, because it was like talking about like a trend guy.
Yep. Innovation, leading an innovation unit. Even as they're starting to talk more about dividing up units into maybe subunits to work with regulators.
David has to come on here and kind of explain the strategy, which is a little mystifying to those of us who've been there.
David Solomon, not me.
No,
the
you're
CEO
right.
of Goldman Sachs.
But they could be a metaverse. They could do everything in the metaverse. Do you know that
the metaverse?
Zuckerberg doesn't want you to use an actual avatar that looks just like you? Because I volunteered that I could get Jensen Huang.
Why would you when you can look better than what you look like in real life? That's the whole point of the metaverse.
But you're saying it shouldn't be hyper-realistic, is what Mark's saying?
Yeah, he doesn't want hyper-realistic.
By the way, I'm telling you, we all know where this is going.
Look how jacked I am. See
First
that? I'm like
use
Popeye
case
the
of the
Sailor Man.
metaverse.
I'm Popeye the Sailor Man.
You don't have to be yourself. You can look better. We all know where this is going.
When I bowl, I always pick the name Beethoven.
He's still not getting
Why
it.
should I put name Jim? I put Beethoven.
He's not even listening.
When I'm going to Wendy's, I use the name Beethoven.
Okay. Twitter, guys.
Does Wendy's ask you your name?
As I said earlier,
money going
we are waiting for the complaint from Twitter. It'll be great reading. It should be. Let's hope. They did a good job at Wachtell in terms of writing this thing up.
Okay.
Like, he has absolutely no idea what he's talking about, but he's entertaining as fuck.
Yeah, had no financing out. This deal does, meaning if financing goes away, deal goes away, which is why you had that letter from Twitter that we were quoting this morning saying, hey, this deal's not terminated, and don't you ever think about pulling the financing. But again, we'll see. Jim, you did reference around the closing bell because of yesterday's conversation and all of the attention it got when I said, if, maybe, about Musk, if he loses in court, if they get specific performance, if the judge, if he says I won't do it, what would happen? There is a case from 2012 where a judge...
He's going to have to pay $1 billion.
Hey, you're in contempt and you're going to jail.
People took a break from trashing me and said, listen, while we're trashing you, I want to talk about how bad David Faber is. I'm sorry.
That.
Hey, by the way, American Express is barely down on that down.
By the way, context is everything, and unfortunately, there was no context of the conversation that we have here at our desk.
I just think that David is far more aware than perhaps Musk about what could
This show is more unhinged than the Friday Night Freak Show.
You have no idea. I mean, people don't listen. They don't understand. They
David,
have no idea.
You were attacked.
It must be so frustrating for you.
What, to be me?
Yeah, because I got it for one day. I kind of ignored it. But
look,
still.
I took pictures of zucchinis, and immediately I got what I would say is scatological use of the zucchini from my viewers. No.
Did he just say scatological use of a zucchini? What does scatological use of a zucchini mean? Like, you ate it and it was roughage and it caused you to shit because a zucchini is a vegetable? Or does it grow above the ground? Is it something? It's not a fruit. It's a vegetable. It's a vegetable. It's a root vegetable. The zucchini. Scatological use of a zucchini. What in the fuck? People told him to shove the zucchini up his ass. Were they suggesting it at, like, jokingly or for play? Like, oh, hey, Jim, you look like the kind of guy that would like a zucchini up your ass. Use it as a dildo.
You live in sexual anarchy?
I was not expecting that at all. My God.
And they
David,
have no idea.
You were attacked.
It must be so frustrating for you.
What, to be me?
Yeah, because I got it for one day. I kind of ignored it. But
look,
still.
I took pictures of zucchinis, and immediately I got what I would say is scatological use of the zucchini from my viewers. No, this is not right. But again, can I go back to the market for a second?
Oh, my God, would you please?
I am telling you that the notes today, you mentioned the Apple.
Because that wouldn't be because scatological. I'm going to need a precising definition here. Scatological. I'm going to get pictures I don't want to see. Nope. Interest in or treatment of obscene materials, especially in literature. The biological-oriented study of excrement. Now, that's what I was expecting. So, like, you would expect it to have something to do with shit. And I just, like, shoving it up your ass doesn't have anything to do with shit. That's what was throwing me off. I got really pedantic about it. I posted pictures of zucchinis on Twitter, and people told me to shove them up my ass. Isn't life wonderful? The media has just completely devolved.
Back to the market for a second.
Oh, my God, would you please?
I am telling you that you mentioned the Apple. You referenced Bank of America note
Did they tell you to shove the apple up your ass as well, Jim?
Apple. Market wants to go higher, and Apple's an example. JP Morgan goes higher on an upgrade. The oils are all for sale.
Yes, you got crude below 100. And the airlines, by the way, 4 airlines
Southwest
are leading the S&P.
How about Southwest?
And Boeing is leading the Dow, as American had their pre-announced.
Whoa, all these airlines are leading the Dow. Meanwhile, they're fucking you guys. A lot of their flights are canceled, delayed. What was it? Something only like 40-something% of flights were running on time here in the United States? Or was that, I saw that with Australia, but I think the number was comparable here in the United States as well. But hey, motherfuckers, they're leading the Dow. They're leading the S&P. They're getting theirs. Oh, my God. They are openly declaring class warfare on all of us. Openly. That's why I'm paying attention to their media. Fox Business says that a recession is needed. Severe recession. Needed. Cool inflation. Oh, this is according to Bank of America analysts. Oh, now we're going over to Fox Business. Stuart Varney. He's going to tell us what the Bank of America analysts are having to say about this.
29 on the NASDAQ, down 150 on the Dow. Okay. Look who's here now. Haven't seen him in a long time, but I want to welcome him back. His name is Mark Grant. And he knows what he's talking about.
That was Bill Gates for a second.
We're going to get the big read on inflation Wednesday, the consumer price index. In your opinion, is it going to show that inflation is about to peak or has peaked?
We have to do something first, and then I'll answer your question. July 7th was a very special day.
It was.
Happy birthday to you.
You don't have to sing.
Oh, my God.
Happy birthday, Stuart. Happy birthday to you. There you go.
That was very kind of you, Mark. I mean, it really was.
I'm like a Larry David. You got like a 3 days, right? It's a 3-day window on each side. We are outside of the 3 days on July 7th, sir. That the birthday ship done sailed. You can't have a birthday party 2 weeks later, motherfuckers. You can't be telling people Happy New Year fucking 3 weeks into January. That shit has an expiration date. All you Curb Your Enthusiasm fans, you know what I'm talking about. So no, you're outside the window of being able to wish Stuart Varney a happy birthday. That ship done sailed, sir. Nobody wants to hear about it. We are a minute into this 3-minute fucking piece where I'm looking to you guys to enlighten me about financial issues and markets and shit, and you're motherfucking taking up my precious ass time singing happy birthday to old ass Stuart Varney. How old is he? Fucking 97? 98? Hopefully not many more, Stuart.
Loads of people from Wall Street and from Fox all chimed in and said happy birthday. And it really made me feel really cool and good. So, having gotten that out of the way...
You're not cool and you're not good, Stuart.
Peaked, Mark Grant.
No, I don't think so at all. As a matter of fact, you have two big numbers coming, the CPI index and the PPI index right after that. They're currently at an average of 9.7%.
The PP index.
And I think it's very likely the average is going to be above 10%. So I think that both numbers are going to be higher than they were last month.
And what does that do to the market?
Nothing good. As you said earlier, swimming in a sea of red ink. I think appreciation plays are very difficult. The bond market's been very difficult. I think the best strategy is an income strategy where you're getting money every month to deal with the inflation rate.
Cash is king today?
No, cash, you don't get anything for cash. I follow about 70 securities, and 15 or 20 are all paying more than 10%. Some of them are paying 12 to 15%, and you get money every month. I think right now in this market, that's the best strategy.
Just having money makes these motherfuckers money.
Retirees or seniors or pensioners.
Having money costs us poor people money, you asshole.
Is a payout per month, over 10%, reliable in the future? I mean, is it going to, yeah, you're going to get your 10, 12% for sure?
Well, there are no guarantees, and of course, past performance doesn't guarantee future performance. But I'm very careful about the funds.
He's legally obligated to say that.
They've been getting over 10% for months now. Some of them have leverage. Some of them have no leverage at all.
Shut the fuck up. Like, you're the most wishy-washy motherfucker we heard from tonight, and we just watched Jim fucking Cramer. Well, it could be, but it might not be. But, you know, some of them are leveraged and some of them aren't leveraged. Some of them are winners, some of them are losers.